Okay, Mark, we are streaming on YouTube and recording, so if you want to go ahead and kick it off.
Mark, you're on mute.
Thank you. Yeah, at this point in the process of our audit, as we're nearing completion of it, we meet as an audit committee and review the audit draft, and the auditors will go over their experience doing our audit and just how the audit process went. And it's an opportunity for us to have a discussion about all of that and the report as well. And so thanks for everybody for attending today and for your interest in our audit results. So I think today, are you going to present the information from the auditors for us?
Yeah, no, definitely, Mark. I can get started. I know Keith is trying to log in here. It sounds like he's having some issues potentially, but
Oh,
shows
yeah.
that he's loading. I can go ahead and share my screen though for the time being, just containing the slides that I sent over earlier this afternoon to you. Okay, let me see if I can figure this out here. More. Hmm. Do you know if I'm actually able to share the slides, Mark? I don't think I have admin access, so maybe that's why. But it would just be that PDF that I sent over earlier this afternoon if you're able to share.
You should be able to share.
Okay. Oh, yep, the green share button. Okay, found it. Cool. Awesome. Okay, let me know if you can see my screen there.
Yep,
Yes, I can see it.
Okay, perfect. And I'm happy to zoom in as well if need be. Okay, sounds like, sorry, Keith is back in. Keith, is your audio working?
I can hear. Can you hear me?
Yes, yep, we can hear you just fine.
Okay, I don't think my video is working. I'm having some computer issues, so apologize. I'll keep working on the video, but as long as I can hear you guys and you can hear me, I think we're good. Okay. Well, I think I was gonna kick things off. I don't know if there's any other opening comments or if you already made those while I was trying to get logged in, Mark.
Yeah, I think we're good if you want to go ahead and
Okay.
proceed with the presentation. I just
Okay.
gave just a brief introduction is all. One thing we didn't do, I guess, I think we know you, Keith.
Yeah.
And so
Yep. We'll do introductions and
yeah, that'd be great.
And get through
Perfect.
that as well.
Okay.
So
Perfect.
So happy to be here at the tail end of the process. We're not quite done where we've got our signature on our audit opinions, but of course we want to meet with the audit committee first and get your feedback on the final draft financial statement document and kind of go through our tentative audit results at this point and see if any of you have any questions, and I'll kind of walk you through the process a little bit and what we've identified, what our audit reports will say at the end of the day once we kind of finalize these things in the near future. So very good news that we're here in this time frame that we initially kind of sought for, right? When your team sits down and puts together the audit time frame each and every year, which is very helpful to make sure this is very organized and efficient overall. But this is kind of the time frame that we've aimed for in the past, and this year we're here before you again with our tentative audit results. And so that in itself is good news. Should give you some comfort that this went according to plan. And we received the information that we needed to get through this process. We got through our field work at the timing that we initially set out for, and are getting at the tail end. So all of that is very, very good news. So we're happy to be here and kind of share our results. So go ahead and move the slides forward if you can. Here's a quick snapshot of the core group of our team. This isn't everyone. It takes a few more staff and seniors involved to get through kind of the core audit work that we're doing. So they spend a number of days on site, both during our initial phase of field work where we're looking at internal controls, and then our subsequent phase of field work once the books are closed out and the McMinnville Water and Light team has gone through their year-end closing process and reconciliations and everything. They've gotten everything ready for audit. We come back out for our final phase of field work, and we bring our team back out for a few more days to work there directly face-to-face with your team. Most notably, of course, Mark and the finance team and everything do a lot of the heavy lifting, but we're talking to folks all throughout the organization as well. And so, but this is kind of the more core group of our team in terms of like the managerial side of things. All of you are familiar with me. I served again as the engagement reviewer, setting the audit plan and taking ultimate responsibility for all the work we do and all of our final deliverables. Olga Darlington serves again this year as our QC or concurring reviewer. She's a partner as well. That is our national practice leader for our power and utilities group. So, that role has to be filled by someone that is both very experienced in their role as either a senior manager or partner, as Olga is, but also dedicated to the industry group. So Olga, like me, only works on entities in the power and utilities industry. So very good to have that second set of eyes that's looking at certain key documents, looking at our audit plan, making sure we follow through on everything that we said we're going to do during the planning phase. And of course, she's reading through the financial statements just like I do, making sure it's presented in the kind of the format that the GASB requires, has all the different disclosures that would be required by GASB, given the types of transactions that the McMinnville Water and Light enters into as well. Aide Alvarado, who's joining me today, is serving as our audit manager. I know she's not been on these calls in the past and as involved as she is this year, but excited to have her involved to both kind of assist me with setting the audit plan and really kind of overseeing our team and making sure that we're getting through all of our audit procedures and our field work in the time frame that we initially set out, and also kind of communicating between the team and of course McMinnville Water and Light as well in terms of how things are going. Are we needing additional items? Have we run into issues? Do we have potential errors or adjustments we need to be discussing as well? So very excited to have Ida serve in that role this year. She is also involved in our power and utilities group and works with me and our other partners on a lot of our entities in our energy group. Ryan T served as our audit senior this year. So he kind of led the rest of our seniors and staff while we were in the field this year. So he's not here with us today, but he was a very key part of our audit team. Okay, go ahead and advance the slides. I know there's a lot of words on this page, but this is really just the reminder of the different deliverables that you can expect to receive each and every year when you hire an independent CPA firm to come in and do an audit of McMinnville Water and Light's financial statements. There's a number of different reports that we have to issue that you can expect to receive out of this process. Number one, most importantly, being the report of independent auditors over the fairness and accuracy of your financial statements. So through all the detailed testing that we do, all of the tracing back to various contracts, agreements, and invoices, and cash receipts and disbursements, all those different procedures that we do to, at the end of the day, get that substantive evidence that we can rely on and say, hey, this evidence supports what has been recorded by your team at McMinnville Water and Light in the general ledger, and ultimately summarized and reflected in your financial statements, right? That it's appropriately supported, that those things are recorded at the right amount, in the correct accounting period, classified in the appropriate account as well is really important in this. When you think of something like whether something should be, an expense should be recorded as, a disbursement, a cash disbursement should be recorded as a expense and running through your income statement, or capitalized as part of a capital project, right? Some of those types of things, making sure they get tagged to the right account and how they get classified is really, really important and something that we look at. So through all those procedures, we have to gather enough evidence in line with our professional audit standards to say, do we believe this is a fair and accurate representation of McMinnville Water and Light's finances as of June 30th, 2024. On top of that, we have to do a technical review of the document itself. So not only validity of those numbers, but again, it has to be presented in a certain form and format that's required by the GASB, and you have to have all the various disclosures that are required in there as well. So not only making sure, hey, all of your information is supported by underlying evidence, but it's also being captured and reflected in your financial statements in a manner that is consistent with the governmental accounting standards that you must follow. And so those are two key pieces of this process altogether. Really just one deliverable, though, in terms of our independent auditors report. Box 3 is a separate report that we issue in line with Oregon minimum standards. This is required by the state of Oregon. They say for every CPA firm that's doing an audit of an Oregon municipal corporation, that CPA firm also has to do some testing and report out on compliance with certain key state statutes that they want us to look at. There's a bullet point list in that report that we typically attach to the backside of your financial statement document. And that bullet point list includes all kind of the key areas that we look at McMinnville Water and Light, that we test to see if there's any instances of non-compliance. Those areas span from making sure that you're depositing the McMinnville Water and Light's funds in approved depositories that are approved by the state treasurer. If you're getting into investments, which McMinnville Water and Light doesn't really have a lot of those, has some, but make sure any investments that you have when you're investing in the market or anything like that, you are limited by state statutes in what you can invest in. And so the state wants us as the independent CPA firm to come in and look at whether you are investing in line with those state statutes. Procurement is another big area. They want to make sure that every Oregon municipal corporation is following those state statutes on competitive bid requirements, rules for informal bids, and gathering in various fee quotes and things of that nature, whether you're maintaining this documentation on file that we can kind of take a look at and do some sampling over that each and every year. I'd say that's the area where we're probably needing to do or put forth the most efforts, because we're pulling a sample there and having to look at some of those documents when you go through a competitive bid process. And then finally, we issue a separate letter that's called our communication to those charged with governance. That's a letter that gives you more information and insight into how the audit went. So outside of just, hey, did you get a clean audit report or not? Did you get an Oregon minimum standards report that has any instances of non-compliance or not? This tells you a little bit more as to how the process went. Did we have delays in the process? Did we have disagreements with management? Did we get everything that we asked for? Did we have errors that we found that resulted in audit adjustments? Which you can have audit adjustments and still get a clean opinion. It just means that those things were corrected before we finalized the audit and put our audit opinion on your set of financial statements that have been impacted by those adjustments. And so that gives you, kind of bridges the gap between when we start the audit and the information we're provided by management and that ending financial statement document that reflects all that information in the format that's required by the GASB and any adjustments that were identified along the way. So those are the different things that we issue as part of this process. Go ahead and advance the slide. We have a number of areas that we identify each and every year as we sit down and talk as a team of where do we want to spend the bulk of our time and our efforts, right? What are those more significant areas that either they're larger dollar amounts or they're more complex, more unique to the utility industry, or there needs to be a lot of good, solid checks and balances in place, internal controls in place that are happening and operating effectively to make sure that at the end of the day, those numbers are getting reflected appropriately and captured in your financial records as well. So utility plant and revenues, your customer revenues, those are areas where there needs to be a lot of different internal controls in place and functioning as they should to be able to catch errors along the way and make sure by the time that they get into your general ledger that they are accurate representations of the underlying transaction. And so those are ones that we look at very heavily each and every year. We spend a lot of time understanding those internal controls, testing those each and every year, independent of each year. So we don't kind of rely on, hey, we looked at this last year, everything was good there in the process, so we're going to, assume that it's the same way this year. No, each and every year we're pulling transactions and testing to see, hey, so seeing that reconciliation is happening. Is it happening timely? Is someone reviewing that reconciliation other than the person that's preparing it? Those are the types of things that we're looking at. We have one on there for management override of internal controls. This is a risk area that we have to note on every audit that we do. Not just a Moss Adams thing, not just for our utility clients. This is something that's required by the professional standards that we're saying on every single audit. The potential for the risk of management override of your internal controls is something we need to be cognizant of, and designing certain procedures to address that. So a lot of times with that, some of the things that we're doing there is we're talking to various folks throughout the organization, and a lot of times that rises up to the governance level. Of course, I got to talk with Commissioner Tankersley this year, but we kind of rotate through who we're talking to at that level. But we're talking to various members of management. We're talking to different employees. And again, the goal there is to kind of step out of the detail audit work that we're doing, and being aware and cognizant of what are people saying and thinking and feeling about the integrity of management, about the ability to put forth a set of sound financial statements that are free of material errors or potentially fraud. Do employees feel comfortable going to their supervisors or managers to discuss any concerns that they have without fear of retaliation or repercussions, right? So these are the types of things that we're talking about, to really step outside of all the invoices and contracts and things that we're looking at and say, hey, what are people feeling and thinking? And does this give us any indication that there's an issue that we need to dig into further? That's one of those things. Another one is we're always designing a new set of procedures each and every year, where we want to look and see, how is fraud happening out there in the news lately? What are we hearing about? What are we seeing as potentially weaknesses at other clients that we work in? Or what are we hearing about in the industry about how fraud has occurred over the last few years? And thinking about those things and saying, hey, could this happen at McMinnville Water and Light? And then we decide to design new procedures each and every year to address a certain area that we discuss. So that's something that we're addressing in our audit each and every year. So when you see that on here, don't think, hey, this is something unique to McMinnville Water and Light. There's a risk of management override of controls. It's not unique to this organization. It's something that we have to be cognizant of and work or filter into our audit procedures each and every year. Of course, those additional procedures we do for organ minimum standards is always going to be a focus in an area where we have a separate audit program and have to test those, since we report out on those. And then IT user access controls. We always want to understand who's in the system, what can they do, and who is monitoring that. How is access given and approved to provide a new employee with access to the system, and make sure they're only provided with the access that's necessary for their job description. If someone gets a promotion, who is checking to see, hey, now maybe they need some new access because of that promotion, but they should have their previous access removed or adjusted. Or when someone is terminated from the organization, how do you make sure that that person is removed from the system in a timely manner and that that's approved? So those are the types of things that we're looking at and want to focus in on, where we spend kind of the bulk of our time each and every year. This is not everything that we look at in the audit, but these are kind of the key areas, I would say. Go ahead and advance the slide there. All right, so the most important thing that you want to see out of this is, what do our audit reports say? So again, we haven't finalized everything, but we fully intend that our audit report over the financial statements of McMinnville Water and Light will be a clean audit opinion, exactly what you're looking for. Any third party that you need to provide these to, of course, that's what they're looking for. If you ever want to go out and issue debt, they're going to want a copy of your audited financial statements. They'll want to know, did you have an independent CPA firm do it? Did you get a clean audit opinion? So a very, very important thing. And of course, the state of Oregon that you have to file your financial statements with is going to look for that as well. We did not have any compliance findings on our Oregon minimum standards audit report. So through the testing we did there, everything looked to be in line with the state statutes. So very good news there. For our communication to those charged with those charged with governance, if I could talk. We didn't note any material weaknesses. This is not the only thing that we discussed in that letter. I'm going to turn it over to Ida in just a second, but that's kind of the big ticket item, the red flag type of language you want to be on the lookout for. And a material weakness in internal controls is kind of the highest level of severity of an internal control deficiency that we could note in an audit, which would mean if we had that, it would mean we think that there's a significant hole in your system of checks and balances where an error or fraud could slip through the cracks and not get identified. So we didn't have any of those. Very, very good news. Exactly what you're looking for there. Go ahead and advance the slide. And I think at this point, I'm going to turn it over to Ida, and I'm going to keep trying to work on my camera in the meantime, so I'm not just a black screen here.
Thank you, Keith. As Keith kind of kind of alluded here to, there are, again, required communication to the board that we would be required to communicate as auditors based on kind of our testing procedures and whatnot. Some of those requirements include our responsibility to, again, examine and communicate any significant accounting policies, as well as then, include any management judgment and accounting estimates that also arise as part of the audit. Any audit adjustments, which in the current year there were no audit adjustments, so nothing to report on that end, as well as management's consultation with other accountants, whether there were any disagreements with management that arose as part of our audit procedures, as well as then if there were any difficulties in performing the audit. Again, lack of response, lack of documentation provided, in which case this year there's nothing to communicate on that front, as well as then any audit observation that came up, including potential best practice recommendations. Again, anything that maybe came up as part of our control procedures, where we see a potential for management to kind of improve upon those controls. Any communication along those lines would be communicated to the board. Kind of moving on to the next slide to further discuss audit observations and recommendations for the current year. So we did not have any new recommendations this year. We did, however, have a prior year recommendation that we did want to highlight. And so kind of to re-jog everybody's memory from prior year, but this occurred just in the timing of when the timber revenue was recognized. It just was recognized kind of in the incorrect period. And then there was, I believe, an audit adjustment that arose from that in the prior year. Kind of following up this year, this was one of the areas where we really focused our audit engagement on. Again, really wanting to make sure that revenue, not only revenue, but also the expenses were recorded in the correct period, were recorded accurately, again, and properly recognized as revenue. And so for the current year, as an update, we noted, again, no errors in the current year. And so really wanted to kind of highlight management's really effort in wanting to correct this error and make sure that didn't happen again in the current year. So again, this was resolved in the current year. And so we wanted to make sure we highlighted that aspect as well.
Yeah, and I can jump in. I know that had to do with an adjustment that occurred last year, and the timing issue had to do with kind of the trying to align the revenue with when the timber was harvested, right? And so some of those reports maybe weren't, I guess, getting over to the accounting department and recorded in kind of a timely fashion. But I know through discussions in the current year that that's been addressed, and of course that's reflected in the results of our testing this year. That information flow is happening, and that the accounting department's getting those reports in a timely basis now, and all of the revenue is now being recorded in line with the underlying harvesting as well.
Okay. Everyone's favorite slide, new audit issues as well as new accounting pronouncements that are kind of stemming here. So first off, we have GASB 101, compensated absences, which will be effective fiscal year in 2025. High level, this will essentially require management to evaluate compensated absences, including kind of sick leave, any salary related items, sabbatical. So kind of provides a more clear definition on some of what those compensated absences include. And I know just in talking to Mark, this is something that, is currently kind of being looked at and definitely considered for the next year as part of the adoption. So, I already have some information there and conversations about the adoption of GASB 101. Next up, we have GASB 102, so certain risk disclosures. So again, this is effective for fiscal years beginning after June 15, 2024. And so this will require additional disclosures surrounding, again, concentrations, or contingencies, or constraints. And so this, again, provides a clear definition on both items, as well as then provides clear definition on the disclosures that will be needed and what those disclosures will need to look like to better highlight the concentrations or constraints, as well as then, any action taken by the government prior to the issuance of the financial statements to mitigate the risks that have been identified as part of their evaluation of the new standard. As well as then GASB 103, which is the financial reporting model improvements, again, effective in fiscal year end beginning after June 15, 2025. So kind of looking into the next year here. But this again, looks at reporting as well and establishing new reporting requirements for the various disclosures. Some of them kind of just summarize. There's a really big list of them, but really looking kind of at the MD&A presentation of proprietary fund statements of revenue, the budgetary comparison information, as well as then financial trend information in the statistical section of the reporting. Anything I missed there, Keith, on those? Kind of wanted to give just a brief little summary.
Yeah, and there's a lot of things I think you just mentioned, Heidi, that like wouldn't even be applicable to McMinnville Water and Light. I mean,
Yep.
the statistical section is only if you do a full, what's called an ACFR, an annual comprehensive financial report, which I'm guessing the city probably does that, right? So they're probably more impacted by this, of course, than you all would be as a standalone kind of proprietary fund type of reporting. So really, the impact here is more so on the MD&A side, where they're just really trying to get folks to make these a little bit more helpful to the user of the financial statements. They're reading through some of these and seeing that they've gotten fairly boilerplate in terms of the language that's used. And really what they're looking for there more so now is just to reemphasize that, the whole idea here is to have the MD&A so that management gets a chance to discuss why did a certain revenue stream or expense line item or a certain asset or liability, why did it go up? Why did it go down? What are the factors that are influencing this? And really kind of giving you that underlying insight that you wouldn't glean just from looking at a set of financial statements and reading through the footnotes, right? It's to give you kind of the why behind what you're seeing. And a lot of the MD&A that they're seeing out there in some cases is just saying, hey, this went up, this went down, here's the percentage change, but it's not really giving you the underlying insight. So when you have a good set of MD&A out there already, you might not have to be changing too much, but really that's what they're getting at with that one, I think, is the bigger change. I'd say too, with all of these, and I know we went through those pretty quick, but with all of them, much less of an impact expected over the next couple of years from these standards that have been issued versus, any of the standards probably over the last 5 to 10 years. I mean, the last time I went to a GASB presentation, they had talked about, I think this was the OGFOA conference back in the spring, actually. And they had someone from GASB there kind of talking about and reflecting on, hey, we issued like 25 to 30 standards over the last 10 to 15 years. That was a lot. And there were some significant changes when you think about some of those standards that were issued between the pension standard, the other post-employment benefits or OPEB standard that was issued. When you look at the lease standard that came out a few years ago, the IT arrangement standard that came out last year, some of those are pretty significant. And even when they don't end up having a huge impact on your financial statements, such as the IT arrangement standard, your team still had to go through a lot of effort to look at a lot of different contracts and agreements and really evaluate and see, hey, do we have anything that meets the definition of these IT arrangement standards that they're talking about? Do we have something we need to record differently from what we're currently doing? And so with these new standards that we see on the page right now, we're not anticipating the same level of effort in the future or the same level of impact on your financial reporting or the disclosures that you've got. So I think that's good news for any government out there that's been kind of dealing with these new standards. It seems like every year or two that you've got something massive that you're having to kind of think about and really spend a lot of effort into analyzing, evaluating, and updating your financial reporting. These shouldn't have the same level of impact, which I think is good news. So GASB's kind of recognized that, and they're saying, hey, we're not going to keep our pedal to the metal over the next 5 to 10 years like we did the last 5 to 10 years. It's going to slow down significantly. And, for right now, at least, we're not seeing significant standards out there that will have a huge impact on your financial reporting.
Okay, definitely wanted to jump to acknowledgments here. Thank you to John and Mark and the rest of the McMinnville team. I know we were on site and everyone is more than happy to answer any questions that we have, and really kind of has an open door policy for us while we're there, which we greatly appreciate. And as kind of Keith mentioned earlier, we've kind of been able to meet every single timeline that's been set. A large part due to the McMinnville team, again, just being so quick about requests and questions and really wanting to get the audit moving forward. Okay, just our contact information there. Keith, myself, and Ryan, and then just another brief thank you there. But turning it over to you, Keith.
So a very clean audit report overall, as you can see. No major findings or anything of that nature. We did not have any audit adjustments at this point. The information that was provided to us was in a very good state because of the internal controls and processes in place that you've got there and the team that you've had. So with that, I think I'll stop and see if there's any questions on anything that we've presented or any questions on kind of the draft financial statement document that we want to discuss as well.
This is Tom. I don't have any questions about anything you've discussed, but I had a few specific questions about the draft document. Is this the time for it, or are we going to go through the document and just should they come up when we reach that point?
Yeah, I'd say if there's no other questions on our any of the content that we've presented on the audit, happy to go through and discuss any changes or questions on the financial statement document. And we can, I don't know if anyone's got it. We can kind of share the financial statement document on screen here. Perfect. And kind of scan through whatever page we want to hone in on here so we can all see the same thing.
Okay, and Jody, jump in if I go ahead of you here, okay, please. So my first couple of questions are just sort of make sure I understand the document. On page 17,
Okay.
where it talks about taxes and other equivalents, that's down in the operating expenses.
Oh, let me get to the correct page here. Sorry, I was thinking PDF. Yep.
Oh, great. So in the operating expenses, yeah, taxes and other, doesn't help you if I point on my screen, does it?
We'll try. We'll
Okay,
try to
so the ones on the light side are basically the pilot, is that correct?
Yeah, that's correct.
And what is it on the water side?
That would be the write-off that we do of the water billings that we don't
Wait,
charge.
okay, thank you. That explains that. So, and again, Jody, you'll jump in if something else comes up.
Yes, thank you for the opportunity.
Next is on page 19. And just to make sure I understand, the collections received for the city of McMinnville, that's basically the sewer and the customer and the city service fee, right?
Yes. Let's see.
Yeah, because you see how they're the same amount. So this is on the cash statement of cash flow. So you can see how they're the same amount. So it's just an in and out because it's a pass through, right? So McMinnville Water and Light does not record those items as its own revenue or expenses. So it's really just a pass through on the cash flow statement.
Great. And then down 2 lines from the bottom before the net cash, due to the city of McMinnville, is that money that's been collected and not paid yet, or what is that?
So that line item and what's represented here is the change in those balances from the prior year and how that's impacting your cash, right? So these are the changes in that specific accrual where you've got certain amounts that are due to the city but have not been paid to the city quite yet. And so if you scroll up a few pages, Ida, you'll see that same kind of line item on the statement of net position or the balance sheet. So it should be right here, due to the city of McMinnville. So what you're seeing on the cash flow is really the change from the current year to the prior year.
Okay, so it's not that we haven't paid our bill, it's just it shows what
Correct.
the change in the bill was. Okay, thank you.
Correct.
The next one. The next one is page 20. And the
Okay.
second paragraph, the department provides electrical and water service to residential and commercial customers within the city limits. Does it matter that that isn't really accurate because we provide both water and electrical outside the city limits?
I mean, we could definitely update that depending on how detailed you want to get on that, or if you want to kind of say,
I mean, you could say the service territories, or but I just think, and that was one of my question is does it matter that it's actually not accurate?
I mean, is that accurate for kind of the majority of it though? I mean, you could
Well, you
say
could-
there's instances. I mean, I don't know the level of revenues and things
Okay.
that are.
Okay, well,
So
yeah, you could certainly say majority too, as far as I understand it, but I would just like that
yeah,
corrected so it's not an absolute statement, and however you want to do it is fine with me.
okay.
And the next one is down in net position and net investment in capital assets. I, could somebody explain that to me a little better, please, that I understand it?
Right. So the Gatsby standards say your net position, or you can think of it as your equity, right? Has to be split into really three different categories, but for purposes of McMinnville and Waterlight, you really only have the two. And so it's saying for your equity at the end of the year, you have to say what portion of that is your net investment in capital assets, what portion is restricted in certain cases, which you do not have, or in what portion is unrestricted, which is everything else. So basically everything that's not investment in capital or restricted.
Right.
The portion that is net investment in capital is represented by your balance of capital assets as of the end of the fiscal year, less any related debt used to finance the purchase of those capital assets or construction of those capital assets. Of course, you don't have any long-term debt that you record, so it's really just your capital asset balance for McMinnville Water and Light. But if you look at another, utility in the state or somewhere else, that's a governmental entity that follows GASB. A lot of times those capital assets you're going to find are financed by debt, so you're not going to be able to just trace the capital asset balance from your statement of net position or your balance sheet to this portion of net position. It's going to be capital assets less the debt that was used to finance it.
Great. Thank you, Keith. I hope that's not on the test that I have to take afterwards. On page 22, due to the city of McMinnville, I think the industrial class has been a 6% rate for the entire fiscal year, hasn't it? I don't know exactly when that change was final.
Yeah, that's a good catch. That change happened September of 23.
So
Well, would have been October 1st.
23.
So
So
most of 23, 24 was at 6%. So that probably should be reworded.
yeah, if
Okay.
we could reword that, but that is what we are collecting for them and paying them, right?
Yes.
Great, thank you. So if we just reword that. Okay, next is page 26, Lafayette. Down in the note receivable, per the terms of the agreement, the city is to pay interest, blah, blah, blah. I think we changed that by contractual change with them, and I wonder, I don't remember exactly when that happened, and I wonder if we need to correct that as well.
Yeah. We did make a change there. They so there needs to be some rewording of this too. Um, so the first 5 years were based on the interest rate
Right.
indicated, but the last 5 years, the interest rate it's set at 5% right now.
Right, and
With-
it can't be adjusted either, right? Didn't we agree we're not going to adjust it?
I think that's correct. Yeah.
Okay, so whatever, again, I didn't have that in front of me, so if we just be accurate on that, please.
The numbers are good, but that description needs to be updated to
Thank you.
reflect that.
Okay, next is page 30. The third paragraph under note 5 about the RECs. I don't quite understand the last sentence about the RECs are internally generated. They have no corresponding value on the statements of debt position. I mean, I think I understand why if they were internally generated, there wouldn't be a value because we have any expense to apply to them. But are all of our RECs internally generated?
No, and the ones that some of them are valued and some are not. And I think this paragraph relates to the ones that are not valued.
Correct. Yeah, there's no accounting guidance out there currently to address RECs specifically, right? I mean, because the GASB puts standards out there for all governmental organizations, and I'd say for the most part, they are looking at not that they don't look very closely at standalone proprietary funds like Minville Water and Light, but they are, since they're giving out guidance for everyone, they're looking at the big ticket issues that are impacting local governments of all shapes and sizes, cities, counties, states, you name it, right?
I'm sorry, go ahead.
I was just going to say, so they do not have a specific set of guidance out there to say, hey, how do you value these? So there's really no way to, or guidance that allows you to put a value on RECs that are, say, internally generated, right? You have no real cost basis in those. It's not that you went out to the market and bought those. When you buy them, you record them on your books, and you have done that.
And we haven't broken out like the payment to waste management is partly for the electricity and partly for the RECs, right? We just treat it all as electric costs. We pay waste, as I understand it, we pay waste management for the electricity that they generate and that we receive. Is that correct?
That is correct.
And then, but we treat that all as an expense of electricity, and that's why there's no value. We don't break out the value of the RECs for the reasons Keith said, right?
Yeah, what I was trying to do is look at we have a work paper on the RECs themselves, and I was trying to identify that, but I can't quite get there quick enough. So I guess I need to look into that a little more. I know that the RECs that Jamie's identified for us, the ones that have value and the ones that are internal, and we don't record anything on the internal ones. How they're generated, I don't know the details on that as well as she does. So,
okay.
But Mark, we don't value the RECs when we get her from Waste Management. I think that's what I was asking.
Yeah.
And I think that's right. I just wanted to look at that work paper because I believe she's identified all the different RECs on there, and the ones from Waste Management, I believe, are some of the ones that are not valued. I just wanted to confirm that, and I can't quite get there quick enough.
Okay, the next question is on page 23, and the retirement health insurance account, that's boilerplate, right? And we don't, that's standard language that we don't have to review.
Sorry, you said page 23, Tom?
You mean 33?
34.
Oh, okay.
34, excuse me.
Nope, no worries.
Good job, Ide.
I was like, we're going the wrong way, but that's fine.
It's that section on retirement health insurance. That's
right. So the state puts out information to help you form these disclosures, right? Because it's all part of a cost sharing plan that the same
Okay.
same with the state PERS plan, right? So this is fairly boilerplate language, yes.
Okay, and the same question for PERS. It's language that
Correct.
came from the state and is
It's updated. Certain things are updated that are unique to McMinnville Water and Lights, cost sharing portion, and the dollar amounts of your net pension liability or net OPEB liability. Yes, but in general, in terms of how the plan functions, this is something the state puts out there to help you with that disclosure.
Okay, on page 42, please, the Lafayette wholesale water sales. Those charges, were they good for the entire year, or because I know Lafayette's charges follow ours, and I don't know if we had a rate increase during that year, that fiscal year?
Let's go look at that.
I believe we had a 3.5% rate increase last year.
So my next question then is if we had a rate increase in Lafayette's, I think is 1.5 times our retail rate, then should we say that? I don't know if this was the final rate or the beginning rate. Should we break that out, or does it matter?
I mean, I would say from our perspective, you certainly could break it out separately for when that change happened and what the impact was,
I would,
and add a few sentences to state that.
yeah, especially if we're using the beginning rates rather than the ending rates, I would not want to put out a document that somebody in Lafayette would look at and say we got overcharged.
Sure, absolutely.
But if it's, I guess it does say to Lafayette for the year ended, but that's not at the year end, it's for the year ended, right? So if we could clarify that, please, and make sure we don't do the wrong one. Okay.
Yeah, are you thinking just a comment, or do you want the are you thinking in the detail there of showing like a beginning rate and an ending rate in the volumetric charge
I mean,
information?
if it doesn't matter for the financial statements, then in terms of being able to go back and somebody, double check what was charged versus what was delivered. If that doesn't matter, then I would just like to make it clear, use the year-end rate and say the rate increased whenever it increased to this amount.
Okay.
But I mean, again, you all know what's required. I just know that this didn't seem accurate to me. Okay, the next one is on page 43. And I just have a question. Is this the farm lease on note 13 leases? Is this the farm lease on Marsh Lane?
No, this I believe is for the cell tower lease.
Oh, okay, great. Thank you. So that's why it's non-cancelable too. Okay, great. Because we had that farm lease and it got canceled, and okay, perfect. Thank you. And that's it.
Okay.
Shane and I actually spotted one just before the meeting, just a kind of a clerical thing that we ought to note too. If I can get to it, let's see. It's on page 25. There's a table at the top of 25. Yeah, right there. So just underneath the title there, Oregon Local Government Intermediate Fund, on that table, there's another line there that should say U.S. Treasury Investments. So there's
Oh,
missing down here. Gotcha.
Yeah.
Oh, just missing the description. Yeah.
Yeah.
Right,
Yep.
right. Yeah.
Great, good catch.
Okay. Did you have anything else, Mark?
No.
Okay. We can add that back in, but then I guess Mark, we
Yeah.
can work with you on some of the other changes that Commissioner Tankersley has brought up as well. If we want to update some of that language in a few of those footnotes.
Would you be able to, since you took some good notes there, would you be able to forward that over to us?
Yeah, I can send that your way,
That'd
Mark.
be great.
No
Thank you.
worries.
Appreciate that.
Okay. Any other questions or comments on the financial statements themselves or the audit results?
I didn't have any comments, and I appreciate Tom's attention to detail.
Very good. Okay. Well, we very much look forward to getting these changes made and wrapping up the audit here in the near future, and then presenting to the full Board of Commissioners here in the near future. So if anything else comes up between now and then, you have our contact information. If there's any other changes or edits or questions that you have, let us know. But other than that, we'll be wrapping things up shortly.
Thank you, Keith. We look forward to hearing you tell us we have a clean audit opinion too. So thank you.
Very, very, very good. Well, thank you all. All right. Well, you enjoy the rest of your day. Happy Election Day, everyone. Hopefully everyone's
Yeah.
voted already.
Thank you, everyone.
Yeah.
Thanks.
All right. Take care. Bye.
Bye.
Bye.